Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, your host. Our topic today is debt counseling, a topic that's very much in the news. Our guest is someone who's been working with people with problems for some time, over 4 years of direct experience. And she is from the Consumer Credit Counseling Service of Central New York. I want to welcome Karyn Dettbarn to the show.
Thank you. Thank you for having me.
It is, unfortunately, as we were talking about at the beginning or before the show, something that is very much in the news, and things have gotten a bit worse.
It has. It has. Especially with the economy. We're seeing a lot more people struggling with their everyday living expenses. People coming in who could afford groceries, now they're struggling on groceries and gas and heating for their house. And they're putting their credit cards and their other bills to the side, so that's why they come in to see us.
So, well, let's talk about the us part of that. What's the company do? I know it's a nonprofit, which is why I was very happy that I was able to get you on the show.
Right. We are a nonprofit counseling agency, and we are accredited through the National Foundation for Credit Counseling, which sets us aside from the other companies. All of our counselors are certified to do what they do. Once they receive their certifications, they have to maintain those certifications through presentations, through counseling, through educational components that they have to obtain and maintain. We're also accredited through the Council on Accreditation. We're also the New York State Banking Department, which we're regulated through. So we have a lot of background on us, a lot of certifications, a lot of education. We have been in the community for 36 years now, so we've been around for a while, and we're local. We're the local financial experts in the area that people can come actually see us in our offices and talk to us for free financial counseling.
That's great. There's also been in the news in the past 10 or 15 years, and I see it on TV once in a while, people still advertising. And it sounds like all you have to do is call this 800 number, and all your problems will be taken away. You know, these debt, I don't know what you call them, but companies that promise they'll get you out of debt.
Right. There are other companies. You may be referring to debt settlement companies, which what that is, you would pay this organization a fee, and they would negotiate the balances of your debt for this fee. In the meantime, your creditors are not getting paid at all. They wait for the settlement offer to come to the table, if you will, and that's when they would take this money that you've been sending them on a monthly basis and send it to them. In the meantime, as I mentioned, payments are not being sent to the creditor, so it is affecting your credit negatively. And a lot of consumers, they don't realize that they can do this on their own, too, if they wanted to go into the settlement direction, which means that they're paying less than the amount that they owe on the debt that they owe. They could do this on their own without having a third party involved in that.
So it sounds like getting some advice from somebody who's not trying to make a profit from them would be a good first step.
Right, exactly, exactly.
What services do you provide?
We offer a number of different services. First, the free financial counseling. So individuals who come to us who really just want to sit down, take a look at their budget, their income, and then their living expenses to see if they're going in the right direction, if they're maintaining their finances correctly. We also do debt repayment plans. That's where an individual will come to us. If they wanted to enroll in this debt repayment plan, we would take all of their unsecured bills, their credit cards, and we would put it into a monthly payment for them. If they did decide to enroll, we would contact each one of their creditors to let them know payments will be coming from us, but on their behalf.
I see.
So we're kind of the middleman where the interest rates are lowered because the individuals enrolling in this program. The creditors would waive over limit or late fees if they have them, and they generally accept lower monthly payments from us as well. Okay.
Because there's a real plan.
Exactly, exactly. So as long as the clients are sending us payments on a monthly basis, we have to in turn send it to their creditors because of the New York State banking regulations that we have to uphold.
And I guess somebody could say, well, what's in it for the companies? And you're reducing the risk that they won't get paid at all.
Exactly. When people come to us, they may be considering bankruptcy. They may not. They may just be over their heads, and they're not seeing any leeway. They're not seeing the balances come down because of the interest rates that they have. They're very high interest rates when people come to us. So versus going bankruptcy, where the consumers, or rather the creditors, would get pennies on the dollar or nothing at all, by enrolling in this program, the creditors are getting their balances that they owe just at a lower interest rate.
So can anyone make use of the service?
Oh, absolutely. There's no requirements, there's no minimum debt, there's no maximum debt, there's no income guidelines. Anyone who feels that they would benefit from this service can come and see us for free.
Now, there's got to be a downside to everything. I mean, I would think that people who, maybe they're not in serious trouble, but they've managed to get themselves, where there's a number of credit cards, maybe a car loan, and a few other things that they're having a really hard time with, but
Right.
they would be capable. Can they also use this program?
Oh, absolutely. Some people come to us, they're not behind on their payments, they have good credit, but it's those interest rates I was talking about that the payments they're sending to their creditors are not going towards the balances, and for years they're just going around in circles. So they're tired of having balances. They want to be debt free. They don't want to have credit card debt hanging over their head. So we have more and more people coming to us because of those interest rates.
I've seen the flip side of this, which maybe it's not the flip side, but it's another aspect of it, and people should be saving money for their retirement.
They should.
And instead they're negative.
Right.
So this seems like that would be a great first step for somebody that says, you know, I'm probably not going to work forever, and I'm going to need money in retirement. Social Security's not enough. Maybe I should go and get some counseling.
Right. Because that's a great point, because retirement's a long-term goal that everyone should have. And if you have debts and you're sending hundreds or even thousands of dollars to these credit cards that could be going towards your retirement, this is a great program for people who want to plan their retirement. The maximum time frame that we can have an individual on the program is 5 years because of the banking regulations.
Okay.
Average time frame is 3 to 5 years. We could definitely get someone out before that, but it really depends on the amount of debt that they
Not
have.
bad.
So you have that ending time frame. You know when you're going to be done with the program. The very, very longest, it'll be 5 years. So then you can continue on to your retirement planning.
So I guess the question, if you're thinking in terms of the time, is 3 years a long time? You know, if I were sitting on the head of a pin, it would be a long time. I think people would like a magic bullet and take a pill and everything goes away.
Right. No, it is work. It is work. But if you take a look at the debt that they have now and the interest rates that they're getting, it's going to take them a whole heck of a lot longer to
And
pay
maybe
that
never.
off. Exactly, especially if they're just sending the minimum payments.
So if you look at the alternative, it's a lifetime
Right.
of debt,
Right.
as opposed to 3 to 5 years, and you're free.
You're done. Exactly.
That would be great. Now, I know you do a few other things. There are courses.
Well, one of the requirements under the bankruptcy code that changed back in 2005 is individuals who file for bankruptcy now have to go through counseling before and after they file. And the reason for that is we want to see if there's any alternatives to bankruptcy. We don't want people to file, so the client would sit down with a counselor to go through their income, their living expenses, and their debts. That's what we go through during any appointments that we offer,
Right.
to get a better idea of what's going on financially. Then we look at any alternatives that we can find to avoid bankruptcy. Some people, bankruptcy may be the only option, but we do look at all options that are available.
What's the downside of bankruptcy?
Bankruptcy, it's going to be on your credit report for 10 years, and it's not that you're going to have horrible credit for 10 years. It's going to be a lot more expensive for the individual. Credit reports are affecting everything now. Insurance companies, they're pulling credit reports, and you may have to pay a higher premium because of the negative information on your report. Insurance companies see as a higher risk that you may be putting more claims through versus someone who has good credit. Landlords, if you're a renter, landlords are pulling credit reports now, and if you have a bankruptcy or negative information on there, instead of the typical 1 month's security deposit, they may require 2, 3, 4 months deposit. So it's more expensive in that line.
And I think even people who are evaluating job candidates.
Exactly. Employers are pulling credit reports too, and especially if you're in the financial field, if they see your credit report is not the best, you may be out of that job because of the situation that you're in. They want to make sure that you can maintain your finances in addition to someone else's.
Right.
Right.
So the courses that Consumer Credit Service of Central New York, and I've left out some, provide, they're only for people who are doing bankruptcy, or are there other courses that you give?
Those specific courses towards the bankruptcy counseling would be for people who are filing.
Okay.
But we also go out into the community. We do educational presentations. If employers or creditors invite us in, or nonprofits, we give presentations on credit reports, on budgeting, how to survive a money crunch, those different topics.
What does that cost?
That's free. That's free. We go out into the community and do those for free.
We can all afford that.
Right. Yes, yes. And we also do, another service that we offer is our credit report review session. And this is also free. If someone really wants to take a look at their credit report to see, to really understand it, because it's a lot of information on there and it can be confusing. If they schedule an appointment and they bring in their own credit reports, they can sit with a counselor, go over their credit report in detail, explaining everything on there, how to rebuild their credit, how to dispute items on there if they need to, and really just get a better grasp on their credit report. It's a very personalized session.
I can see that as being really good for a lot of people. And sometimes it might be a relative, or a parent, or a child that might need some help.
Right. Right, and that's, for a lot of people too, that's just the first step. When they come in and take a look at their credit report, they may consider the debt repayment plan because of the amount of debt that they have out there. So we advise them on how to contact their creditors, what they need to do to go to the next step of repaying their debts.
Maybe we could talk about the dynamics a little bit more of what happens when somebody calls you and they have a problem. What kind of is a typical thing that people would go through?
A typical thing, they will call and schedule an appointment to sit with one of our credit counselors. And we have 5 offices, Syracuse, Utica, Binghamton, Watertown, and then here in Albany.
And you're right off of Wolf Road.
Right off of Wolf Road, so we're not that far away. Right. So people, they can choose if they want to come into the office and sit face-to-face with a counselor, if they feel more comfortable knowing that there's someone there, they can do that. Or if they have mobility issues where they can't get to our offices, we can actually do the appointments over the phone as well. I mean, it's pretty much the same thing that would happen during a face-to-face appointment. We would just mail the information that was reviewed during the appointment to the client. Right.
And in that case, what kinds of things would you need?
We would need their monthly income information for the household. We would go through all of their living expenses. It's a very detailed list that we go through, from rent to groceries to gas for your car, gifts, entertainment. So everything that they could think of that they pay out in a month, or even quarterly expenses too, or even annual expenses that we go through. And then we go through all of their debts. So anyone that they owe, we would need to know their names of the creditors and the balances that they have with them. So their statements. If they have their statements, we can. That would be the best thing. Otherwise, if they don't, if the accounts are older, they can request their credit reports, and we can go from the balances and the names on there. Right.
Now, is budgeting a part of that? It sounds like it would be.
Yes. Yeah. When we go through their expenses, we go through their budget to see what they're spending, typically on a monthly basis, and the counselor would go through and make some suggestions on how they can revise their budget, cutting back on some items, any ways that they could talk with the client to really come up with ideas that they can agree to reduce some of the expenses. And these are, and the suggestions that the counselor makes are completely voluntary. The client does not have to go through and do any of these if they don't want to. It's up to them if they want to make those decisions.
Right, and I'm sure there are many kinds of things where that would be optional. But there must be other areas where, it's optional, but if you keep doing this, it's not going to work.
Right.
If you keep going out to eat every night and spending $150, this is not going to work.
Exactly. Or reviewing, internet. We always tell them to go to the library. They can use internet for free for entertainment, DVDs at the library.
Thank you.
We're always plugging the library. We're always promoting any free services there in the community, so we're always encouraging that. But once again, it's up to them if they want to take the next steps.
So you find people in all kinds of situations, from minor, maybe not so minor, and then really on up to this is hopeless.
Absolutely.
Let's go into the part where, what makes it hopeless? It's just way too much?
Well, it really depends on the financial situation that they come to us in. We see so many different people, from being on a fixed income all the way up to the working professional. So once the counselor really evaluates their household expenses and their debts, what's coming in versus what's going out, that would really determine if it's too much or not.
Right.
I mean, we have a lot of people who are on a fixed income who are very, on a very, very tight budget, and they are so determined on paying their debts off. And they make it work. They make it work somehow. And anyone who's a working professional too. I mean, if they have the resources to pay back the debts that they have, it really depends on what's coming in, how much debt that they have, and the expenses that they're responsible for. Whether or not it's going to be, something. Their next step would be bankruptcy, for example.
So, if they can work it out, then it seems like there's two things that immediately come to my mind. One is, well, maybe they're doing things that they can't afford to do. But the other thing is the interest.
Mm-hmm.
And I know I've seen a case where the interest was a pretty high percentage of what they were actually spending. And so they'd gotten themselves in a situation where they made enough money, but they didn't have the interest.
Mm-hmm.
Do you see that a lot?
Yeah. Well, with credit cards, depending on what state their headquarters in, that really regulates how much they can charge in interest.
Oh, I didn't know that.
Right. For New York State, it's 25%. If the bank,
a lot.
It is. If the bank is headquartered in New York, though, if someone has a credit card where they're banked in another state, their regulations, their maximum interest may be different.
Higher?
I've seen credit cards as high as 42%.
Oh my God.
Right. So, and a lot of people really don't pay attention to the interest rate on their statements. They may just look at the minimum payments due, when it's due, and send the payment in. And then when they're sitting with the counselor points out, look at your interest rate. What is your interest rate versus, the minimum payment they're asking, the finance charges. That's why your balance isn't going anywhere, because of the interest rate they're charging.
And isn't that more of understanding? Because the first thing that comes to mind is, well, if I had a credit card and they wanted to charge 42%, but Citibank, based in New York, would be charging 25%, which is still enough to make
Still
you groan.
high. Oh, yeah, absolutely.
You would just change.
Mm-hmm. And especially if you have...
But would Citibank take you at that point if you had such a high amount of debt?
It's really up to them. If you mean to transfer, to open up a brand new card, it's really up to them if they would be willing.
So it might be hard.
Yeah, it might be hard because the outstanding debt that you have, they would be required to pull your credit report, to see your history. And if you're coming right up to the line, if you have too much debt, if you're overextended, then you may not get a lower interest credit card because of that.
Right.
Right. And a lot of credit cards, they really have to pay attention to the fine print. Creditors have a universal default clause. And what that is, if someone has, for example, credit card A, B, and C, they're paying on all of them, but something happens where they fall behind on credit card C. Credit cards A and B have the right to increase the interest rates because of that default on C. And if you have a number of credit cards that do that, it just throws people right over the edge because of the interest rates are going to go right up.
Everything pops up.
Their balances increase, the minimum payments increase, and it just throws their budget way off, and that's when they decide to come to us for help.
I think in society, we look at people and we say, well, you got yourself into this, you deserve it. That's not a very good way to look at it, because people get into situations and we don't understand them.
Exactly.
But then there's other ones where it's not a question of understanding, it's a question of sympathy. What about people who have an accident or a health issue or a death?
Medical issues.
Do you see much of that in terms of that causes the problems?
Absolutely. Medical, it's something that you can't control. I mean, if you get sick and if you don't have health insurance, that could be thousands and thousands of dollars that you might not have, probably don't have, that either would go on credit cards or not get paid at all.
And I read a case this week in the paper, I forgot who it was, and maybe it's better not to mention, but the person owed $56,000 in medical bills, and he had insurance.
Oh, wow. Oh, my gosh.
Because of complications. I don't know how it worked, but...
Wow. Yeah, we're seeing more people filing for bankruptcy because of that reason. It's an unexpected thing that happens in life, and if you're not prepared for it, if you don't have a backup, a savings account that acts as a shock absorber if something should happen, then it absolutely would cause very much stress on their household, and even maybe possibly pushing them into bankruptcy.
So let's go a little further into the bankruptcy thing. We could spend the whole time talking about how not to get in the situation for those who are making choices that aren't the best. But for those who get stuck, whether it's for medical reasons or it's just too late, what are the options in terms of bankruptcy? How does that really work?
Well, bankruptcy, there's two different types for consumers. There's a Chapter 7, where an individual basically would walk away from the debts that they have. All of their debts would be discharged in this bankruptcy, versus a Chapter 13, where they would be on a repayment plan for a number of years. 3 to 5 years is the average, and they're only paying a portion of the debts that they have. And this is all, in the portion of it, and the monthly payment is calculated by their attorney. There's a formula that's used for the attorney to determine how much they're going to be repaying.
An attorney, not a judge.
Not a judge, an attorney.
Okay.
Right. Because one of the requirements, they have to go through their budget again to see if they can even afford that Chapter 13 payment, to see if they even qualify. Right. So that was another change. Qualifications for the Chapter 13. Chapter 7s, there's income guidelines now. If you make more than a certain amount in the state that you live, you don't qualify for that for the Chapter 7. So a lot more goes into it.
So you're going to have to pay something back if you're making enough money.
Exactly. If you make more than what the median income in New York State is, then you might not qualify for a Chapter 7, which would push you into a Chapter 13, where you'd be repaying that portion of the debts.
And then you work out your situation under strict controls.
Right.
As opposed to somebody who went to you in the beginning, they may have been able to work it out without the bankruptcy.
Exactly.
And you mentioned already that the credit rating is, of course, worse if they have to go the bankruptcy route.
Right.
How big is that difference for someone?
Bankruptcy is the worst thing that can happen to your credit report.
Okay.
It's the worst thing. It does stay on your credit report for 10 years, as I mentioned. It's more expensive all the way around. In beginning stages of bankruptcy, the fees that are involved for filing, the attorney's fees, the filing fees. When people come to us for the counseling, there's a fee for that as well.
How do they pay that?
Exactly. They're filing for bankruptcy, and it's expensive for people to file.
But they have to pay that back, the filing part.
They do.
Even though somebody else is not getting paid.
Right.
It's kind of interesting.
Yeah, so it is more expensive all the way around, and bankruptcies, they are published in the local newspaper, so it is a public record.
There's the shame factor.
Exactly, exactly. Mm-hmm.
And nobody knows exactly your circumstances, but there's your name.
Right. Right. Foreclosures too. That's another public record. If your house is foreclosed upon, it's a public record. But for bankruptcies, yeah, it shouldn't be an option. People shouldn't be viewing it as an easy way out, because it's going to be very difficult in the next few years to reestablish your credit, to get credit at all. And it's going to be costing you more money for anything that you want, cell phones, insurance, as I mentioned. If you want to buy a home, that's going to be affected as well.
There's another reason why people do or don't. I think there is. I'm not in the business, but there seems to be another reason why people would not do bankruptcy, and that would be they just feel it's their debt and they want to get out of it. Mm-hmm.
We do see people with they feel a more obligation to repay the debt. But then we also do see those people who bankruptcy is an easier route rather than working to pay off the debts, which is unfortunate. And you do see those repeat filers, which is why the bankruptcy law was also passed to hopefully cut back on the repeat filers. Okay. Because the length of time that people can file has now changed as well. Once you file a Chapter 7 bankruptcy, you can't file again for 8 years. So that changed. But yeah, we do see a lot of people who come to us who are dedicated in repaying their debts, and they don't even want to hear the B word, the bankruptcy word.
Right.
So we do get those people, absolutely.
Yeah, I want to hammer in on this a little more, because I guess I'm learning too, and one of my, would you call it a perceptual flaw, I guess, is that it seemed like an easy way out, whereas the honorable thing to do would be to work out some way to pay it off. But how do you, just maybe one more stab at it to nail it down and make it so clear? There is a point when it makes sense, and that's why people come to you and say, what would be the right thing to do?
Well, we can't make those decisions for
Okay.
them. Unfortunately, we give them, when the counselor is talking to the client, we give them options. We give them a number of options that they have to choose from. We can't tell anyone, oh, you need to file for bankruptcy, oh, you need to do this. They have to make that decision on their own. We would like them to repay the debt that they owe rather than going the bankruptcy route if we really see that they can afford to do that. But it's up to them if they want to make that decision.
But at least now it seems that the scale is weighing a little more evenly, so that if you choose the bankruptcy route because it makes more sense to you, you're still going to be paying a pretty hefty price for that. And you may end up paying pretty close to what you would have paid if you worked it out yourself.
Actually, you're going to be repaying less if you filed for bankruptcy.
Okay, so that's just the truth.
Yeah, you would be repaying less, and that's really determined.
In the long run, even.
Right.
Okay.
Well, in terms of the Chapter 13 payment, if you
Well, I
were...
was thinking of everything.
Oh,
You know,
overall? Yeah.
Overall, after 10, 20 years, if you look back, there are cases, obviously, where you would do better with bankruptcy and some where you would do better working it out.
Right, yeah. And I was going to... Yeah, bankruptcy, you really want to, unfortunately, it's actually increased. Since last year, we've been doing this for 3 years now, the counseling, and the bankruptcies from last year has actually increased. So more people are filing, more people, they're hearing that it's not difficult to file, that they just have a couple more steps, a little bit more money to pay, and people are still filing, but I don't think they really understand the effect it's going to have on their credit.
And that's important for them to
it's
do
very important. The counselors are really trying to, hammer in their head how it's going to affect them in the long run, and what they're going to be facing once they're done with the bankruptcy. The higher interest rates. Their interest rates aren't going to be in the 5, 6, 7%. They're going to be in the low to high 20s when they get their credit cards. Any loans that they have, it's going to be more expensive all the way around.
So you want to buy a car.
Right. If you want to buy a car, it's not going to be the lower interest rates that someone with good credit would typically get. It would be in the teens.
Right. Okay. Even with a car. Okay.
Even with a car. Right. And it's just going to be more difficult for them to figure that into their budget.
Okay, I think I got it. We mentioned something else that's really current, and that is foreclosures with the mortgage crisis. It's harder to get credit, but some people are also having to give up their homes. What's going on in terms of your experience there?
Well, we haven't really seen an influx of the adjustable rate mortgages that we've been hearing in the news, or the interest-only loans that are going to reset, which means their interest rates are going to increase, which is going to affect their monthly payment, could easily double it, or add a couple $100s onto it. We've been seeing more people defaulting on their taxes on the mortgage itself, with the fixed monthly mortgage, with the fixed mortgage.
Okay.
But that can still affect someone. It could be a foreclosure because of that default. With the economy now, the expenses, the higher expenses in gas and groceries, that's contributing to their budget being a lot tighter and struggling to find out, okay, who do I need to pay? Who's a priority here? And for some people, the mortgage is such a large monthly payment, and they find it easier to make those smaller ones to the credit cards because they tend to yell the loudest, so they're going to get paid first.
And that was kind of a surprise to a lot of people, wasn't it, that they found out that people are not paying their mortgage first, but they're paying their credit card first.
Right. And that's the complete opposite. They should be paying the mortgage first. That is their first priority that they should be paying. Their mortgage, any second mortgage, home equity, their heat, their electric, all of their household expenses and secured debt should be paid first.
Because it's one thing to have your credit go bad, but it's another thing to lose your house.
Exactly. And at the very bottom of the list are the credit cards. I'm not saying not to pay them, but if you were to run out of money before you were to pay them, those are the debts, those are the bills that would have to suffer. Because it can, if you lose your house, it's going to not only affect you, but your family. It's going to uproot everyone. You're going to have to move. It may uproot them from their schooling, and it's going to be more expensive. And you really need to, people need to really contact their lender, be in contact with their lenders so they can find out what options are available to them. Consumer Credit Counseling is a HUD certified counseling agency, so individuals who are starting to fall behind on their mortgage or foresee it in the future, I encourage them to come in because it's free counseling. We can talk to their lenders on their behalf with their permission to really see where they are, in the default status, to really find out what options are available to them to avoid foreclosure. That's our whole intent, is to avoid foreclosure and have them move. Individuals who have adjustable rate mortgages, which we see in the next year or two, really coming into the Capital District. It hasn't come around yet. We've had a couple in the Poughkeepsie area, down in the southern area, come to us for that help. But in the Capital District, it's going to be the next year. They really need to be proactive. With adjustable rate mortgages, as I mentioned, the interest rates are going to jump up. It's going to increase their monthly payment, which is going to throw their budget off. So to get out of that adjustable rate mortgage or the interest-only loan, they need to be able to refinance into a fixed rate mortgage, and they need the credit score and credit report good enough to be able to do that. Otherwise, lenders aren't going to risk putting them into another mortgage. Lenders are really tightening up on the reins because of this foreclosure and because of the mortgage crisis.
And they've been criticized for being too loose.
Right. So now they're tightening up, and that's why people really need to keep their credit in mind if they do have one of those mortgages, because your credit doesn't change overnight. It takes time. It could take years for it to change around. I mean, your payment history on your credit report stays on there for 2 years. So if you have one negative payment a year and a half ago, it's still going to be on there for another 6 months. So people need to think ahead to find out what they need to do to get out of those mortgages that they have.
Also, before the show, we talked a little bit about being open about a problem. And I think that I was bringing it up in terms of just sharing with a spouse what the problem are. And you mentioned that you've seen that where one person might manage the finances and they don't share.
Right.
And here you're saying you need to predict into the future, and you need to look at your situation early before it gets out of hand. But the tendency for us would be, if we're going to hide something, we'd rather hide it and not suffer by sharing pain. So
we do have couples who come in, or rather one couple come in, the husband or the wife come in by themselves, and they disclose to their counselor that the debt that they have, their husband or their wife has no idea what amount it is, or they have no idea the extent of it, or if they're defaulting on their credit cards, they're not aware of that. So really talking to their spouses, they definitely do need to, because it's not just the amount of debt that one has versus another. It's if something should happen and the expenses aren't shared. For example, if a husband or wife passes away and the spouse who passed away was more took care of the finances in the household. The person who's now left, if they don't know who they owe, how to contact them, who is what and where, that's a real big burden on someone to take over and try to find who they need to start paying now, and to resume making payments on these debts that they have no idea about.
And from what you're saying, getting the advice to plan ahead is much better if it's early, and then you have a way to help them plan better because it's not so late in the game.
Right. We really need to reach out to people who aren't in the stages of the accounts are in collections, or the accounts are in legal status, or they're garnishing their wages. We need to reach out to the people before they fall behind, or if they have fall behind within the 3 months, 4 months, 5-month time frame, so we can have a chance of helping them. And once it goes to a collection agency, which is an outside agency, they're very aggressive in collecting, and there's no guarantee that they would even work with our organization. So the earlier that we can get these people into us, so we can help them and advise them what they need to do to get back on track, the better all the way around. And when someone comes to us, it doesn't necessarily mean that they are going to enroll in our program. We're here just to educate them on what they need to do to get out of their situation. So we have a number of people that we just counsel budgeting, and we send them on their way to continue managing their finances on their own.
So we want to make sure people can find you.
Yes.
Let's put all that information up on the screen.
Okay.
phone number, website, how do they reach you?
Well, we're located at our local office in Albany is at 2 Computer Drive West, right off of Wolf Road in Colonie. We're directly behind Denny's on the second floor. They can call us at 518-482-2227 if they want to schedule an appointment or talk to a counselor. You can also visit our website at www.credithelpny.org.
And we'll put that up.
Okay, great.
One more thing, though, before we go. I saw on your website something about 10 by 40, and I didn't know what that meant. What is that?
Well, right now, out of 115 agencies who are accredited through the National Foundation for Credit Counseling, which is our watchdog agency, we are ranked number 12. So we're the 12th largest in the United States. By our 40th anniversary, which we have less than 4 years to do it in, we want to be ranked number 10 or higher. So it's a big goal, but it's aggressive, but we can do it. And we just have to reach out to the community to let people know about the services that we offer.
Well, thanks for reaching through us. We're very happy about that.
Thank you for having me.
Thank you, Karyn.
You're welcome.
And I want to thank you for watching and hope you enjoyed the show and that you watch again next time. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.